Hello, Felipe here. Just wanted to give you a little bit of an introduction to the solidarity economy, capital reciprocity, a concept we were talking about. And we thought we'd start with this spectrum. Elizabeth, do you want to just introduce the spectrum for us?
Great. So we've adapted this from Odyssey Capital, which we encourage everyone to check out. And essentially what it is it's a representation of this concept of a capital continuum. So I think many people understand this concept of investing for impact and have seen a lot of activity on the sort of left side of the spectrum here, where we look at of course, traditional markets where there's generally a lot of extractive principles at play, this idea of taking more than we give and trying to extract profit. We've moved gradually in our impact investing world toward aware and less extractive investing through things like ESG opportunities, environmental, social, and governance opportunities. And gradually, I think many people, as they become more aware of their investment holdings, are seeking to do things that do no harm and actually proactively invest in impact. What we're really excited about, though, is the ways that we can engage in sort of this adventure of moving further along the capital continuum here to really truly embody principles of sustainability and, of course, a livable future, which is ultimately about bringing our capital into a place of reciprocity rather than supremacy. So what are the ways that we are directly investing our capital to repair and regenerate the earth, our communities, and ourselves?
Thanks, Elizabeth. Great overview. And I think just to give you a couple tangible examples of that capital reciprocity or this reparative, regenerative investment, it's helpful to also reflect on our own journeys. As Elizabeth and I have been working with investors, we realize how many get convicted first for their own assets. And so I'll tell you my own story. About 4 years ago, I made my first slow money investment, $2,000 to Bobby, a baker in Raleigh, where I live. And meeting him and investing in his small bakery helped me do a different kind of diligence than I had done before. But having this relationship with him, the whole idea in slow money is we're restoring relationships of food sheds and ecosystems and beginning awareness. Now, that confidence led me to invest in a few co-ops. I was on the board of a co-op accelerator. I saw some great entrepreneurs. I wanted to support them. Those direct investments gave me some real tangible realities of how you ask these questions of business models and think about risk and return differently with the livable future returns. They were actually repairing, giving wealth to Uber and Lyft drivers. They were helping power an agency. And so it helped me think about structurally, where does power get concentrated? And it almost always gets concentrated with the investment. The capital providers almost always get to allocate where things go. And to me, that's the fundamental extraction exploitation relationship between workers, communities that generate value, and then who gets to decide that value. If there's a worker there, like in an employee-owned firm, and so this is where I met Phil Reeves, he was trying to convert existing businesses to employee-owned businesses. And their Apis and Heritage Fund raised a significant amount of capital. But for me, Quechua Impact Fund invests in a lot of cooperatives, a lot of Black fund managers. It's well diversified, 60% in real estate, 40% in different kind of companies. 90% of that 40% is established companies, only 5% is in startups. So very well diversified, low risk, targeting 5 to 8% returns. But to me, that example of Quechua was so persuasive that I ended up shifting about 25, 30% of my capital there a couple of years ago. So I feel like I'm able to live in this capital reciprocity where all those firms, the benefit, the upside is shared with entrepreneurs, communities, workers, and capital providers. And so it does generate positive returns. And to me, it's very far over in this livable future embodied investing.
And I'll share a couple of examples as well. I think what Felipe and I are really excited about is this concept of the solidarity economy and the ways that this non-extractive, regenerative, reparative investment can build a solidarity economy where we truly are centering this principle of wholeness within ourselves, wholeness within our communities and with our planet. So thinking about whether or not we're in the relationship we're in with each other and with our communities is a relationship of integrity. And so I went through a journey similar to what Felipe described, where I took some money out of an IRA and invested in a local housing fund in Detroit, where I live, to essentially try and be in relationship with families that were seeking affordable housing in a community that's been really ridden with speculative investing practices in the real estate industry, which has really wreaked havoc in the kinds of stability and community that we're seeking to provide. Similarly, I recently went on a journey of trying to understand whether my ESG accounts for my IRA were actually based kind of on this principle of solidarity, and noticed that many of them had divested from fossil fuels, but were in major tech giants. And these are companies that do not pay their workers fair wages from my perspective. And so ended up removing money from those ESG funds and towards something called the Carbon Collective, which is really proactively investing in the kinds of companies that really steward a more regenerative future for people and planet. So this is a journey that each of us can engage on. What we're really excited about is the ways that these kinds of investment experiences that we're describing bring us into relationship and into encounter with our communities, with people, with entrepreneurs who are on the frontiers of a new and different economy, and ultimately move us toward a more solidaristic future.
And we feel like even for institutional asset holders who have much larger assets to steward, it can feel really complicated to figure out how to carve out a piece of money that you can actually have this direct human relationship with the entrepreneur you're investing in. Obviously, we often do fund managers. There is some human element, but so often our markets are so intermediated. And I think Elizabeth has convinced me that our markets are still immature for this kind of solidarity economy investing, and recognizing that capital markets are structured in a particular way to maximize the interests of the centralization and concentration of wealth. And that's what's exacerbating inequalities all over the place. So if we go to what Pope Francis is inviting us to, the margins, the periphery, those that are excluded, the indigenous communities of the rainforest, the indigenous communities of the land, the Lumbee tribe where I am today, it helps ask a different kind of question. And I think as a church, as people with wisdom traditions, that lineages that go back many, many generations, and thinking about the desire for intergenerational solidarity going many generations into the future, we can begin to bring our own formation and our own most powerful experiences, and encourage, even with our investment resources, taking a small percent, 1%, 0.5%, and trying to deploy that in a different way. And if your investing team, your manager, even a couple board members, the investment committee, a few people find opportunities in your community to deploy capital and get to know the entrepreneur. For example, Molly Hemstreet here in Morganton, North Carolina, we're going to host a retreat for folks who want to encounter. They have a 60-person worker-owned cooperative where I met Maricela and Walter, immigrants from Guatemala, and they now are exercising autonomy at multi-million-dollar scales, 200,000 square foot manufacturing facility, the leading edge of recycling old fabrics. So a lot of the textiles that you see are recycled, smart wool. They're actually in those partnerships. They're leading the frontier for sustainable textiles in the US. And it shows the possibility when you're in that space, you feel different and you recognize you can participate in the economy we most long for. That really is based on human dignity, the workers having autonomy and agency. So you can see I get excited about it. We want you to get excited about something that you feel deeply convicted by.
So we really think that this participatory style of learning is something that we can engage in as individuals and as stewards of institutional assets. So whether you're managing thousands of dollars or billions of dollars, that there is real value in engaging in this kind of direct solidarity economy-based investing, and that it's through that proactive engagement and through encounter and relationship that we will really help to reshape our capital markets in service of the kind of future that we're looking towards. So we want to invite you into that journey with us, and we want to share what we're learning through our own journeys, and just excited to be in this work together.
And recognizing that sharing, that discernment together is part of how we embody our faith. It's part of how we live into more fully faith embodied investing. And I think there's so much about faith consistent and faith aligned, but our general critique is that minimizes to kind of a set of faith doctrines or faith practices. And that's one step to avoid harm and exclude. And so negative screens, excluding out things is a first step, but there's two other important steps. One is important, the formation, this encounter experience, that's vital. And third, like Liza just said, sharing in community, learning, discerning, taking this contemplative prayer so we can ground ourselves in what matters most in our own most important work. And through that work, we can become catalytic for capital markets to mature in the ways that incorporate the social environmental realities that we're facing now for the first time that we haven't faced before.
You just reminded me, Felipe, that the term religion, religio, is to tie together, and solidarity is about the whole sum. It's about becoming whole. And so I wonder if the ways that faith practices and wisdom traditions that are embodied in different religious institutions can be the source of wisdom to help us go through this exercise of tying back together, of bringing back together and making more whole. Let's make more whole the economy that we know is actually in service of our truest selves, of our truest essence as people. So it's an amazing moment to kind of rewrite the stories and the assumptions that are guiding us in how we're shaping and participating in the economy.
Well, thank you so much, Elizabeth. We invite all of you to join us at the Francesco Collaborative, our workshops with Fatica and other partners in this ecosystem, and we look forward to journeying together.